So, scholars, today we are going to talk about chapter number 7 for managerial accounting. We have already completed for the cost part, so the chapter 1 to chapter 6 for the cost part of the course, and from chapter 7 all the way to chapter 11, the next 5 questions are going to be about budget. And this chapter number 7 is called Master Budget. And in this question, I have selected this questions from the end of the chapter: preparing a financial budget, a schedule of cash receipt, a schedule of cash payment, cash budget. So 3 things we are going to do. We're going to prepare a schedule for cash receipt, means all the cash that is coming into the business. A schedule of cash payment, the cash payments we are going to make in the next 1 year, and the cash budget, how much budget we have to carry in terms of how much cash we're going to have at various level. So this is Puckett Company has provided the following budget information for the first quarter of 2024. Total sales expected are $216,000. Budget purchases of direct material is $40,600. Budget for direct labor cost is $36,800. When we use the term budget here, it means that we are setting aside this much money for buying direct material and this much to pay our labor. The budgeted manufacturing overhead cost is the variable manufacturing overhead, which is $1,025, depreciation for $1,000, and insurance and property taxes of $6,650. These are all budgeted amount. That means they haven't been paid yet. What we expect to pay. We could pay more than that or less than that, but that's our expectation. Budgeted means expected. Budgeted selling and administrative expense that we are forecasting is salaries expense $14,000. This is different from the labor. This labor is involved directly in making the product. This labor is the salary of administrative people or the salespeople. Rent expense $2,500, insurance expense $2,000, depreciation expense $350, and supplies expense $4,000. This is considered as like a head office expense, and this is called a factory expense if you want to differentiate between these two. So the first thing we have to do is to make a schedule of cash receipt from customer. So a schedule of cash receipt from customers. So we are expecting total sales. The number is given to us, 216,000. All right. And then we have some more information on the next page. Sorry. It says additional data related to the first quarter of 2024 for the Puckett Company. Capital expenditures include $41,000 for new manufacturing equipment and to be purchased and paid in the first quarter. So you have an expense coming into the first is $41,000. Cash receipts are 75% of the sales in the quarter of the sales and 25% in the following sale, in the quarter following the sale. So for example, if you are selling $100 worth of products, you would receive $75 in the first quarter, and the remaining $25 will come into the second quarter. Direct material purchases are paid 50% in the quarter purchase and 50% in the, so if you are purchasing $100 worth of direct material, you would pay $50 during this quarter, which means January, February, and March, and then you will pay $50, remaining $50 in the next quarter, which would be March, April, and May. Direct labor, manufacturing overhead, and selling are paid in the quarter incurred. So direct labor, manufacturing overhead, and selling and administrative costs 100% are paid in the quarter. If it is related to incurred, means if it is related to first quarter, it will be paid in the first quarter. If it is incurred in second quarter, it will be paid in the second quarter. Income tax expense for the first quarter is projected to $49,000 and is paid in the quarter incurred. So this was also a payment of first quarter. Bucket Company expects to have adequate cash funds and does not anticipate borrowing in the first quarter. The December 31st, 2000 balance in cash is $25,000. So December 31st to January 1st, you have $25,000. And in account receivable is $21,600. And in accounts payable is $16,500. So I will make this for you so you can see that. So cash, we have $25,000. AR or account receivable, we have 21,600, and accounts payable we have 16,500. So these three I made it for you. It's going to be look like these three. All right. So total sales is $216,000, and cash that we have so cash receipt from customers, okay, how much cash we are going to receive. So we're going to receive, first thing we have is account receivable balance, which is 21,600. So account receivable balance at the beginning of the quarter as of 1/1, because we are talking about the first quarter, is 21,600. And then first quarter sales you would receive 75% in this quarter. So 75% of 216,500, sorry, 216,000 is $162,000. So we are taking 75% because we have discussed in the previous one that we would receive 75% of the sales in the quarter of the sale and 25% in the next quarter. So that's what we're going to receive. So the total cash receipt from customer, total cash from customers, we're going to be the total of these two numbers. So that will be 183,600. Okay. And then the remaining, we received 162,000. So let's say minus 216,000. So we received the $54,000. So account receivable balance as of March 31st or April 1st is the same thing, will be $54,000. So this is for second quarter. We are not interested, but I just want to let you know that the $216,000 a year making sales, you're only going to receive 162,000, and that 54,000 will come in the second quarter. All right, so that is your schedule for receipt for your customer. This is your total sales. So this thing ends over here. This is just a side note for your understanding that I'm putting over here. So that is our schedule of receipt. Now we're going to make a schedule of payment. In the schedule of payments, first thing we have to have direct material purchased. We are purchasing, how much direct material we are purchasing? 40,600. 40,600. And then we need to know is cash payment, how much cash payment of direct materials we have to do. All right, so cash payment so that is the cash payment that we're going to do. First thing we have is accounts payable that we have known is 16,500, the one that we made it over here. So we have an accounts payable as of December 31st or January 1st is 16,500. And then we have to cash paid for direct material. Remember, we have to pay 50%. Direct material purchase are paid 50% in the quarter. So we have to pay the 50% of 40,600. That will be 20,300. And then we also have to pay total payment for direct material. So total payment for direct material would be 36,800. So this is the payment you need for direct labor, for direct material. Now the cash payment for direct material. Now we have to do cash payment for direct labor. For the cost total would be, because we said in our question statement that direct labor, manufacturing overhead, and selling and administration are paid in the quarter incurred, and we know that the direct labor cost is $36,800, so that would be $36,800, and there will be no change in it. And then manufacturing overhead, cash payment for manufacturing overhead, we already know that would be manufacturing overhead we have to pay $1,025. $1,025. And then we have to pay insurance and property tax, cash for insurance and property tax. That would be 6,650. So that will give us a total of 7,675 for cash total payment for manufacturing overhead. So we have a cash payment for direct labor, we have cash payment for direct material, and we have a total cash payment for manufacturing overhead. Okay, and then we have to calculate the selling and administrative expense. So we have salaries of $14,000. We have rent of $2,500. We have insurance of $2,000. And we also have supplies for $4,320. So the total payments for selling and admin would turns out to be zero. Let's use a calculator. 14,000 plus 2,500 plus 2,000 plus 4,320 is 22,820. All right. Income tax we have to pay. We have already given this number of $49,000. And then total payment for capital expenditure. Expenditure is $41,000. All right. So we know the income tax, capital expenditure, total payment for selling and administrative expense, total payment of manufacturing overhead, cash payment for direct material, cash total payment for direct labor. So we have a total payments for everything. If I add these things, so that would be 36,800 plus direct labor of 36,800 plus overhead 7,675, then selling and administrative 22,820, then 49,000 and 41,000. So that will give us $194,095. So these are the total payments, but the total payments are divided into capital expenditure, income tax, selling and administrative expense, manufacturing overhead, direct labor, and direct material. So these are the six categories, and we are making a total payment of $194,095. This is our schedule of payments. This much payments we have to have, and these are cash payments. Now we need to find out how much cash we are receiving. We are receiving only $183,600 cash, but we have to make a payment of $194,095. So we're going to do another one in which we're going to prepare a company cash budget. So how are we going to do the cash budget? So this is the second part, prepare Puckett Company's cash budget for the quarter of 2024. Somehow I missed the question, so I just rewrite on my manually. All right, so first thing we have to find out how much cash we have. So at the beginning of the, we talk about that at the beginning of the quarter, we have $25,000 cash. So beginning cash balance is $25,000, and we are cash receipt, the cash received during quarter one is going to be $183,600. That would give us a total cash available of $8,600. So this is the cash payment. So this is the cash available. Now we have to subtract the cash payment. So how much cash payments we have to do? The cash payments we have is for direct material, direct labor, manufacturing overhead, tax, capital expenditure, and I'm missing one more thing. Selling, administrative, and general. So selling, administrative expense. So direct material we know is 36,800. We know labor is 36,800. We know manufacturing overhead is 7,675. And selling administrative is 22,820. Tax is 49,000, and capital expenditure is 41,000. So that gives us a total of $194,095. Okay, so when we subtract this, this gives us an ending balance of cash that would be $208,600, 14,505. So that would be the ending balance of our cash. at the end of the second quarter. All right. So please let me know if you have any question. This is just the one aspect of the master budget in which we calculate the schedule of cash receipt, how much cash we are going to receive, how much cash payments and what payments we have to do, and how going to get the cash to make these payments. Please let me know if you have any questions. Shoot me an email, and I will see you in the next video. Thank you.